Morning, Fractal Effects team. Please make sure you guys read the disclosure. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Today is CPI, so we'll be avoiding any U.S. assets. We'll take a look at oil just like we did yesterday. We'll just go over mostly market analysis and some other educational material. We'll jump onto the charts in a minute. So on the right-hand side here, we have NAS. We're just keeping it up just to take a look at it. There's your news drop right there, that big candle. We have not filled in 50% of it. And the market has moved up from open, green across the board. Oil, we had a buy model. And we had a trumpet model here. So as soon as the market got above the blue zone, so this is our new indicator that we have painted on. As soon as it went over the blue zone, we bounced off of it. And that would have been your early entry model. Sure, it'll set up a different, another setup as well. Here we have a fair value gap. So after it hit the blue zone, we usually look for the first fair value gap to be formed, and then we take that first 5M fair value gap. Here we didn't really tap a fair value gap, so the market did really take off after the blue zone. That would have been the first fair value gap, didn't really touch it. Second fair value gap. Here we're coming back now into the second fair value gap. 20 EMA. As mentioned yesterday, this is how we use, if you missed the early entry, then you use the blue zone indicator as confluence when you're trading the spotlight strategy. So we're still waiting for confirmation to see which direction it wants to go. We'll keep an eye on this fair value gap here. I'd like to see it come all the way down here, get some gesticulation, maybe even tap the blue zone again and then take off. But this late in the game, we've already taken out previous day's highs right here with the yellow line. Now keep in mind with either of these models, and we go over it in the Learning Hub, it's only a buy model until it's not. And it's only a sell model until it's not, meaning once you've taken all the liquidity to the upside, it could reverse. So we've already had a buy model bounce off the blue zone and take out previous day's highs. Now let's see what it wants to do. That's why we wait for that confirmation. Days like this, we definitely wait for confirmation, either to the upside or the downside, to let us know if it wants to continue this trend or if it wants to reverse after sweeping this liquidity now. And then, as mentioned before, the purple zone, just painted off the purple box there, all the way back here. This is a dynamic indicator, so it paints sometimes multiple zones, depending on where price action is going. But here's the first purple zone, and this is the zone that both Asia and London react off of. It usually, not always, but it can be the reason and the confluence for the London reversal. So London shot right through it, reversed here, went up, touched it again, 3 taps, and before pushing up. Same thing with Asia. Asia tapped it, and then took out the purple zone highs. Usually when we get a tap, we're looking for, first of all, where it taps, where it rejects, and usually the goal, the TP, you can try to go for your 1 to 3, but for a safe bet, we want to just take the purple zone highs or lows as our TP. So if it hit this way, then we would look for the lows of purple zone as our TP. Here it hit the range here. We actually did sweep the lows as well. So then we would have aimed for purple zone highs as the TP, which it hit in the red zone. And then, as mentioned before, London used it as a reversal. So the purple zone is a very, very strong magnetic point where Asia and London react off of. And the blue zone is a very, very highly algorithmic zone that New York reacts off of. It is either trading to or trading from the blue zone. This is one of the most highly algorithmic strategies out there. It gets a little cluttered sometimes when we have the spotlight strategy under it as well, but that's just for more confluence. We want to match up upside expansion models with buy models and downside expansion models with sell models. That's why we have these 2 indicators lapped. But the blue zone indicator, you can use that without the spotlight indicator and vice versa. We just use it for more confluence. So we're green across the board here. We're looking at US oil on the left. Because of CPI news, we're only concentrating on US oil and or off pairs for Forex. We're not looking at any US related assets. We do have NAS up here, but we're just looking at this. So since we've taken out previous day's highs, for oil, I want to see a confirmation first before we make any moves. Unless we just drop all the way down and we get another reaction off of this first fair value gap or the blue zone. And then if we get a confirmation on any of the other assets, we'll jump on over there. But again, this is one of those weeks. CPI, PPI we normally avoid. But this is unfortunately what the week looks like. So the blue zone indicator is now fully active. We've just uploaded new videos that goes through the characteristics of what these buy and sell models look like and how to utilize this indicator to its full potential. For people who like to trade on the 15-minute or the 1-minute time frame, it is fully adaptable for that as well. There's toggles at the bottom where you can turn on the 15-minute zones and the 1-minute zones. Now again, these zones are very dynamic. They're based off of certain calculations, and they might not appear if you're trading, for example, if you're watching the markets all the way through, you might not see them immediately, but they'll only form once the indicator has made those calculations and discovered one of those zones. Sometimes you might not even see one because it hasn't found one. This is as closest to machine learning as you can get. So we're just going to wait for a confirmation, but we'll do some market analysis here in general. So we already had a bounce off the purple zone, and then it painted a second purple zone here. So I don't want to see price drop below this second purple zone. Ideally, I'd like to see it stay above the blue zone and push past previous day's highs. I'd even like to see it dip in a little bit deeper, touch this fair value gap. Now again, these are the days we recommend you don't trade. So I'm not sure if anybody attempted to even take this trade without any confirmation. So we had a tap of the blue zone, but this is the first confirmation we're getting right now. This is the first pullback. None of these fair value gaps, well, there's only really two here. These two fair value gaps have not been tapped. So we had a bit of a runaway market once it tapped the blue zone, and sometimes they do that. Now keep in mind, New York usually has a manipulation move, and this indicator actually lays that out for you as well. These little green lines. Now that's just further confluence. It doesn't always have to be a manipulation move, so you got to use it with caution. But we would like to see those things match up. So if we're all bullish and we have a buy model and we have an upside expansion model, then ideally we want to see it sweep liquidity to the downside first and let that be the manipulation move. And then we look for a trade setup to go long. So usually when we have a mixed model like this where we're green across the board, we have a buy model, and then the market actually breaks to the upside first. Then it could be a manipulation move, again, back into the range, bounce off the blue zone, and then another shot at it. That's why you just got to be patient. Unfortunately, yesterday, the market took a minute to move, but it did eventually break the lows. So the blue zone stayed intact. Now, could we be getting a reaction right here off of this fair value gap? We could, but we're already done with the early entry model. Once you've taken out previous day's highs or lows, we're done with the early entry model. Then we specifically concentrate on the spotlight model, because the only way we're going to get over this now is if I see a confirmation. Get a confirmation that it wants to continue up over this, otherwise it could reverse. So you just have to be patient. But let's take a look at yesterday real quick. Not the biggest fan of trading views, scrolling. Should have some kind of a scroll lock here. If you're on a Mac like me and you try to use your fingers, like the double finger scroll to the back, it almost takes you to the previous page. 1 second. Okay, so here is yesterday. So this was right around the time we started looking at it. Market came all the way back. So the early entry model, we hit the blue zone. There was a fair value gap. It was actually pretty beautiful yesterday. Beautiful entry. Tapped it, dropped. You would have got your 1 to 3. Came back. This is when we started looking at it. So this is when the spotlight indicator had fully formed. And we were looking for a confirmation. Unfortunately, we never got one. The market just danced, but again, if you were part of the blue zone entry, you would have got that second opportunity to hit your TP, because it came and it eventually hit the previous day's lows. So that's how we use the blue zone indicator in conjunction with the spotlight indicator. It just becomes more confluence for us. But when you're using it on its own, first you isolate, figure out if it's a buy model or sell model. Excuse me 1 second. Sorry, just getting over a cold. I thought I'd spare you guys a cough in the air in the morning. Yeah, so you can use it on its own. First, we just figure out if we have a buy model or a sell model. And then we obviously want to make sure where price is sitting in accordance to our zones. And then as a third piece of confluence, are we manipulating to the upside or the downside? So in an ideal situation, let's say you have an upside expansion model, spotlight model, and you have a buy model, and we see price break and sweep the lows. Then we know that we're looking for a buy, and we're going to wait for the market to get above the blue zone, tap the blue zone, and we look for a fair value gap entry. And the fair value gap we're looking for is on the 5M, usually for the blue zone specifically. So we do, it's called create a fair value gap, or sorry, tap a fair value gap, create a fair value gap. That's what we're looking for. We want to tap a 5M fair value gap, or our blue zone. We want to create a fair value gap on the 5M, and then we want to tap that. Here, the market again, reacting off this fair value gap, might give us our confirmation. Since we've already had an early retracement, remember your spotlight setups, and you've had an early retracement already, and the market might move quick once we get a bullish confirmation, because it's already done that retracement, it's already tapped the 20, it's already filled in an inefficiency. Well, that's all the market is doing. It's either taking out liquidity or filling in an inefficiency. So we've taken this liquidity, previous day's highs, moving back in. We filled in this inefficiency, but let's see if it wants to move down and fill in this one, or even sweep this low. So don't expect too much out of this week. That's just part of it. So we have uploaded new educational material associated with not only the blue zone, but a few other market dynamics. I believe, if I'm not mistaken, there's 1 or 2 more videos that are going to be going up by the end of today. And tomorrow we have core retail sales at 8:30 Eastern Standard, unemployment claims. And then Friday, we only have 1 orange folder. Again, just an all-around stagnant week. You'll see these big moves when the news drops, and then the rest of it is just really more or less manipulation. Sometimes they'll just sit there, take forever to push, but that's expected in weeks like this. About 10 minutes from 11. Let's see if we get a confirmation on oil. No fair value gap created here on the 5M. Looks like they're just engineering new liquidity. I'd like to see it drop, take out this low, tap that 20 properly, and then push up and create a fair value gap. And then that fair value gap will be our point of interest. And then we just want to get a confirmation, tap the first fair value gap, go for 1 standard deviation. That's our goal. Let's see if the market gives us that today. So people who are trading the early entry model, even if they get started a little earlier, sometimes they can end up at the same page that we're all on when we're trading the spotlight strategy. As mentioned before, there was clear signs that the market was going to push up from the blue zone, but we didn't get a good entry. Our 2 main fair value gaps that were created did not get tapped until now. Here's the first one. But by now, since you've already swept the previous day's highs, it's better to just wait for that confirmation. Let's take a look at some pairs while we're waiting. So again, we're not interested in trading any US related assets, but we just got a confirmation on GBP USD. Just want to take a look at it. Let's see what it looks like with the blue zone attached to it. That's a big blue zone. So there's our purple zone. That was the catalyst for the London reversal. So London reversed off of it, came back down to it. We have a buy model as well. There's our blue zone. But again, affected by the news. So anytime you see these, and this is one of the days, one of the reasons we avoid this these days, we can get big zones like this because we have big wicks and big candles, and it calculates all that as well. So when the range is this big, right now we are below 50% of the range. The range does have a consequence encroachment point, just a line right down the midpoint, just so you know exactly for purposes like this when you have big ranges, or big zones I should say. But we're technically below 50%, but the entire setup is in the zone, which just leads to unfavorable trade setups. It's hard to get a high probability trade setup when you see this kind of thing, but it's fine, it's expected. We can't get mad at this scenario when we're not even supposed to be trading this asset during this time. This is just to kind of show you what it looks like. Let's go one day back. Well, I guess yesterday was PPI as well, so it would have been something similar, but let's take a look at what it looked like yesterday for GBP USD. And we'll jump back over to oil. For anybody joining us late, this is the kind of day you should have expected on CPI PPI week. Here's a great example of a sell model. Excuse me 1 second. So yeah, we have a sell model here. Market got below the blue zone, tapped it. The range stayed small. A lot of gesticulation, a lot of back and forth. This is why you shouldn't have been trading. Let's jump over to oil again. So everything is painted for you with the blue zone indicator. The only thing you really have to do is paint out any 4-hour fair value gaps or daily fair value gaps. So just go up to the daily or the 4-hour time frame and paint out the fair value gaps. The next iteration of this indicator will even show you the previous day's highs and lows, so you don't even have to worry about those. But that's another area of interest. Paint out previous day's highs and lows and the closest 4-hour fair value gaps or daily fair value gaps, because that's where the market is heading to. So I have yellow fair value gaps are daily, and purple are 4-hour, just so you can distinguish which is which. But that's the only other thing you need to paint. The rest of it, the indicator paints for you. So when you see that manipulation move, you know it's going up, you know where it's going to tap, and then you could get a reversal as mentioned before. It's only a buy model until it's not. It's only a sell model until it's not, until it hits a higher time frame PD array, premium and discount array. Make sure you watch all the videos in the Learning Hub so you understand what those are. So we could get a full reversal here because we've already swept previous day's highs and we just tapped a daily fair value gap. That's why I'm more interested to see what this market does after we get a confirmation or after it hits either this fair value gap or the blue zone. And sometimes that happens. Sometimes it hits the blue zone and it runs straight to where your TP would have been without letting you in. And on days like that, I don't look for a second entry. I look for a new trade setup. Minutes from 11. So either oil gives us a bullish confirmation or I want to see what it does here. Now it's heading towards that 50 EMA and that first fair value gap that was formed after hitting the blue zone. So if it fails to get past this blue zone and this fair value gap, then we're most likely pushing back up. Remember, days like this, you want to avoid all US related assets. So if anybody is trading NAS or any Forex pairs that has the US dollar in it, these days are not going to give you the highest probability trade setups. I'm sure you could find something in there. Yeah, broken clock's right twice a day. Somebody could have winged it here with the news drop even. It's 50-50. Doesn't make it a high probability trade setup. Remember, anything under 70% and you are gambling. Market slowly making its way. I'd like to see it hit that 50 EMA, and then this fair value gap. I want to see what it does here. But this is the line I do not want to see it get below. So if we see some rejection off of here, might even tap the blue, but I want to see it start pushing back up. I'll most likely bounce off that fair value gap and head down to this 50, but this is the area of interest. We're not looking for a sell, by the way. I'm just charting this up just to see how long this is going to take before it actually starts to push down. Could just turn around right here at the 20. We've ducked below it. Could shoot up over, but then we'll be able to tell in the next 2-3 candles. Because once you know what you're doing, it's no different than walking a dog on a chain. I know it's going to come back down. We're looking for it to go back up. It doesn't make these favorable trade setups. There have been days where the market's, for example, right here, and I know it's going to take out previous day's highs. It doesn't mean I'm going to jump in for that, for like this tiny move. If you don't have your 1 to 3 risk to reward and you don't have a anchored trade, meaning you don't know where your stop loss is and you're just jumping in midway through a trade and you didn't get the best optimal entry, then you're just wasting your time. Then you have nobody to blame but yourself. There we go. I think we tapped that fair value gap. Ish. A little bit more. As mentioned before, it could actually push up from here too because we have the 20 EMA, but something tells me we'll get a deeper draw. Well, let's see. For anybody joining us late, we're looking for either a confirmation to the upside or we're looking for the market to bounce off this zone and even possibly the blue zone, but we want to see rejection. So we'll hopefully see the market reverse here, or we'll get that confirmation, tap into a fair value gap and continue up. Either way, I'm not looking for this market to drop lower than the blue zone. Let's see what happens though. Excuse me. did get a Aussie New Zealand alert as well. Let's take a look at that. Just get a confirmation. So no early retracement, so I'd like to see it. It's funny, it looks exactly like the same trade setup from yesterday. And sometimes you'll see that back to back on CPI and PPI day, or certain days. It's literally the exact same, identical setup. So bullish confirmation, we'd like to see it draw back in, touch this 20, tap this fair value gap, and let's see if we get a reaction. We have, I'm assuming, so a bit of a contraction. More of a mean range model. These are pretty much forming inside of each other, or rather London's just slightly below Asia. Oil now, let's see if it actually pushes past this fair value gap or if it continues down. So it's playing these two fair value gaps. Still waiting for that confirmation on oil. Remember, hit a fair value gap, create a fair value gap. It's always a good sign. We got 2 minutes 39 seconds left, so if this fair value gap stays open, this might just be reversing from this 20 EMA. Get rid of that. Instead, we'll paint this one. Again, if it just takes off, it takes off. Remember, the more the confluence, the better. You gotta stay patient during this time. I've seen the market get literally 2 pips away from its take profit, only to come all the way back down and actually hit the fair value gap that we were looking at for the best entry. and then eventually go back up and hit that TP. So be patient. Don't get FOMO. If it doesn't hit your trade setup, you don't take it. Wait for the market to come to you where you've lined it up. So 50 seconds left. I want to see this fair value gap stay open. So we're going to have to see another candle print. And then that third candle, I want to see come back down and tap this zone. 30 seconds. Just want to make sure this is painted properly. Seven seconds. Excuse me. So now this is the fair value gap of interest. I want to see if it comes back down. Taps here. We get that reaction to the upside. Remember, this is not the trade setup, by the way. We're waiting for confirmation. This is just to see, to show you guys how to do market analysis, forecast, to figure out exactly which way the market is going. We're green across the board. Aussie New Zealand here. Looks like it started its pullback. Now it could just be reacting off this fair value gap, but that's outside the range. I'm not interested. I want to see it come back into the range. Tap the 20, this fair value gap, see what it does here. See if it wants to push up. A little over 15 minutes left. Two minutes, 35 seconds left. Now if it leaves this fair value gap open as well, and that makes this one a breakaway gap, reassures that the market actually does want to continue back up from here. We've swept these highs already. Aussie New Zealand frozen here. We're not interested from this fair value gap. Just want to see what happens down here. $47 seconds left. Oil continuing up still. Did we take that high? Not quite. Almost. $29 seconds left. There you go. Took the high. Let's see if we get a bullish confirmation. So now this becomes our fair value gap of interest. I want to see the market at least come back and tap a fair value gap now before pushing. Could it take off without us? It could, but now it's about getting the best entry. So we're green across the board. We've gotten our bullish confirmation. And this is the currently, we'll see how this one prints, but this is our fair value gap of interest right now. Just a little under 0.5 standard deviations. So all the telltale signs are there. We're above the blue zone this late in the game. That means the market wants to probably continue up. We've gotten reaction from here. We've gotten the bullish confirmation. I just need to see it tap a fair value gap now. Now again, if this candle closes, when you have this early retracement, usually it taps any fair value gap. So as soon as this candle closes, if there's a fair value gap in here, it might just tap that, push. But for now, I'm still waiting for this fair value gap. And hopefully we get that tap before we hit one standard deviation. $12 minutes left. Let's draw out this fair value gap as well. About 1 minute, 14 seconds left. Let's see if this fair value gap stays open. If we tap that, with one standard deviations right under here, So this is a daily fair value gap. And again, this is not a coincidence that one standard deviation is sitting right under the midpoint of that daily fair value gap. There's the consequence encroachment. So we're just looking for a good entry, but that's where we're going. And hopefully it gives us a proper 1 to 3. Otherwise, there's no point. So right now, I want to see where it bounces off. So it can go as low as here. It just depends on where it bounces and where that entry is. Aussie New Zealand reacting off that fair value gap again. Not interested there. I want to see it touch the 20. I want to see it touch this fair value gap and get a reaction. Okay, so that fair value gap is now left open. So this becomes our area of interest. I want to see this next candle tap it. As long as it stays in this zone, it might be worth it. Getting a pullback here now. 2 minutes 56 seconds left on this candle close. This thing could just continue up, leaving fair value gaps. We needed to tap one of these to actually get a decent entry. Somebody asked me if I could compare this to any sport. You know, we obviously look at this as a 9 to 5 for us, but some people who are more competitive, they wanted to know if this is actually comparable to any sport, and I realized it's very comparable to fishing, if you call fishing a sport, but it's all about patience. You have to sit there waiting for the right opportunity. Sometimes you might be sitting there all day without an actual catch, and you have to be cool with that. But patience is the name of the game. At this point in my life, I never get FOMO. Doesn't matter. Because remember, it's not just about trading the indices. That's one aspect of it. But on the back end, again, these strategies, they'll help you with swing trading, with investing. Everything in the Learning Hub teaches you how to invest, teaches you how to... Now, keep in mind, we're not giving you any specific stocks. We're not actually giving any financial advice, but we are showing you how to actually look at a chart setup for anything. It could be Tesla, it could be Google, it could be Apple. And it's the same strategy. Remember, it's fractals. What happens on a big scale is happening on a small scale. Whatever happens on a bigger time frame is happening on a smaller time frame, the exact same thing. So if you miss a trade setup here, that might be fine because you might be in a longer swing trade, or you might have got in, you might have jumped into Google when it dipped and hit a fair value gap. And you might be riding that investment out. So it's not just one-dimensional. We teach you the whole thing. For example, right now, there's at least 4 stocks that I jumped into just last week. And they're all profitable using the exact same strategy, using the swing trading strategy and the market maker strategy. Those are for investing and swing trading. And it's no different than putting in a buy order and a sell order with your broker. Buy Tesla at this price, sell at this price. You don't even have to look at it. But you want to diversify. You want to make sure you're invested in you want to, or your entire portfolio. You're invested in some stocks, some blue chips. You want to make sure you're invested in the S&P. And then all of this stuff that we do, this is the extra. This is the icing on the cake. So when you don't get your trade set up, that's fine. Your money's already working for you elsewhere. That's what allows me to be patient. But yeah, the main thing we teach you is the diversification of your portfolio. That's very important. Use the swing trading, use the market maker models to invest, to actually invest in stocks, to hold some of these trades longer, and then use the spotlight strategy and the blue zone indicator and strategy to do the daily trades. But once you know how to read a chart, once you know how to do top-down market analysis, once you understand market maker models, buy-sell models, it's all fractals. Just because we do this on a daily doesn't mean you can't do this on a weekly or a monthly. I'll even give you an example here. Let's see what happens here with this. In 3 minutes, if we don't hit our zone, we'll most likely conclude this session, but I'll go over at least one stock just to show you how to actually mark up a chart. So now this has become the fair value gap of interest. Let's see what the market does here. But this is too high of an entry for me since I'm only looking to go to the midpoint. On any other day, we might even be looking to get past 1 standard deviation, but this time 1 standard deviation is lined up perfectly with the midpoint of a daily fair value gap. That's just extra confluence. It could hit that and just drop down. That does not give us our 1 to 3. I'm not getting in up here. That's 1.63 return. But as mentioned before, we got a couple of minutes. Let's see if this candle drops lower. So all the way up into here. I might still be interested. But it has to hit that and wick in the next candle. So if you check us out on Fractal Effects, make sure, like in the Learning Hub, the swing trading section of the Learning Hub, that's what's going to teach you about investing. That's how you look at stocks. You do the top-down analysis to figure out exactly where a stock is going to bounce. And then you can use the market maker models as your entry. And since these are bigger holds, once it hits your zone, we're not talking about stop losses anymore, right? So you don't get Google at the price you want. It's Google. It's going to go back up. You just hold it a little longer than you would have. But if you get the right entry, then you maximize your returns. And that's what we teach you with the swing trading strategy and the market maker model entry. So that's for stock investing and swing trading. For example, for people who like to trade on the 4-hour or the daily, use that. The blue zone is under the early entry models. That's the blue zone indicator and the blue zone strategy. And then obviously the spotlight strategy, the crux of fractal effects. That's all under spotlight. But make sure you understand market dynamics. Go over every single video, understand it. And then when you have access to these two indicators, then you're covered on the lower time frames. And then when you know how to do top-down market analysis, then you're covered on the higher time frames for investing. But you want to diversify your portfolio. That's the whole point of this. People ask me if I'm a trader. I'm not a day trader. I'm an investor who also trades daily. But I'm on Market Watch. Make sure you have, you don't have to have a subscription to any of these websites, by the way, but make sure you have Forex Factory. That's completely free. That just shows you the economic calendar. Market Watch, they give a lot of information for free, even if you're not subscribed. Bloomberg, how even Apple, the Apple stock app, gives you news. As soon as you make a watch list of the stocks you're watching, it'll give you news. So just know what industries are going to be pushing, do some market analysis on those charts, and we show you how, and exactly look for that entry. Same thing we're doing here. We're waiting for the market to come into our zone. You have a first tier and a second tier, and you just set buy-sell order. So even if you don't find a daily setup, you've diversified your portfolio and maximized your time as an investor and a trader. That's the point here. It's not one-dimensional. Anyways, we're over our time. We did not enter our zone, so we'll pass up on this. But I'd like to show you at least one setup that we've done. Let's move over into a single frame. Let's take Google. Now I have to reiterate, this is not financial advice. This is just us walking over pretty much the top-down analysis of how to take a look at these bigger stocks. Turning off the spotlight strategy. Let's go up to the daily. And we start at the weekly, actually. So you want to take a look at the weekly time frame. Mark out there's the all-time highs of Google. And there's your first fair value gap. There's your first weekly fair value gap. Now remember, what's the market do? It's either taking out liquidity or it's filling in an inefficiency. We've already taken out all-time. This candle right here. This is a weekly candle. It took out all previous highs. So we've taken that liquidity. What has it not done? It has not filled in an inefficiency. So that's the first inefficiency. And there you go. There's your first tier. Crossing first tier. Right across the consequence encroachment, you set an alert. As soon as the market hits that, then you wait and you drop down to a daily time frame. These are all going to line up. There's your first daily inefficiency. Look at that gap. You don't think the market's going to come in and fill that? And you drop it down to the 4-hour once the market returns here. Same thing, same gap. And then you work your way down. We show you how to do top-down market analysis on any stock you're looking at. And then you drop down to the 15-minute and you use what's called the market maker model for your entry. We talk about an accumulation and a distribution phase. So what's happening on one side is happening on the other. Here, perfect example. So here's a sell model. There's your reversal. Drop a line right down the middle. Now keep in mind, market makers, they can't buy and sell like you and I do, like the retail traders. They're dealing with billions of dollars. So they have to stagger their trades as they enter the market. And it leaves telltale signs. That's what order blocks are. Order blocks, and again, watch the video where we go over all the definitions and the market dynamics. But that's what order blocks are. Order blocks are the market makers leaving a telltale sign of where they entered their position. So again, here's them selling. And that's right, they sell as the market goes up. And then this is where they make their biggest sell, but they sell some here, sell some there. And the market comes back to these zones to mitigate it. They mitigate those positions, some in loss, but all you got to do is wait for the market to go below it, tap it again, and then push. Obviously here there's already been like 2 or 3 accumulation phases. So here, for example, this would have been a better entry before the final reversal. There you go. Market dropped below it, tapped it again, dropped, continued down. We walk you through the entire process. This is how you diversify your portfolio. The day trading is the icing on the cake. You have to become a full-fledged investor. We don't tell you what to invest in. We're not giving you financial advice. We show you how to do top-down market analysis and then do the research. It's simple as going to MarketWatch and seeing what everybody is focused on right now. What are people looking at? What markets are pushing? What markets are in decline? Avoid those. Look at the market and all the professionals. See what the economists are saying. Focus on those markets. But the top-down market analysis, that stays the same for every single stock you're looking at. But anyways, that's our time. Please check us out on fractaleffects.com. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. And check us out on Instagram as well. Anytime there's a disruption in our feed or just new educational material we're uploading, we'll be doing that on Fractal Effects. But thank you for joining us. We'll see you again